Okay, welcome in, everybody. It's another week here, and
Ah, G. Hold up.
no worries. So we had quite a eventful close to the week. I think majority of you probably did not expect what happened at Jackson Hole to happen, but I think we were quite prepared for that very small pullback that we were talking about from past Sunday's webinar. And we have been discussing over, the past couple of weeks how this market is just in full melt-up mode, and that there have been changes in the outlook of monetary policy all the way through the month of August, multiple times. Now, Jackson Hole on Friday was a big development in the idea of where monetary policy will be heading to in the next 1 year. This is being said because Powell's way of speaking suggests that the Fed might change the outlook on how the normal pace of monetary policy will go forward. This is actually a defining moment because if you realize that just shortly after COVID, is when the Fed expected a higher than usual inflation monetary policy stance. And so they have been saying for a long, long time that we will be hovering around 2+% to 3% for an extended period of time. Well, fast forward now, it's been 3 years, right, since that policy stance changed. And so the Fed is now going to slowly ease off from that monetary policy stance and start cutting interest rates in the month of September. Okay. Now, having said that, there are quite a few market moving pieces of news this week that might or might not move the market. That being one of the things being NVIDIA's earnings. Okay. Now remember that this is important to note because first of all, the earnings is in 2 days for me, 3 days for you guys, 27 August. And remember that this is a $4.3 trillion market cap stock that is now the biggest holding in both NASDAQ and the S&P 500, right? So remember how in the past many, many years, Apple was the one considered to be the one to move the market. Well, now, as we have been talking about it for multiple months, NVIDIA is the one to move the market, right? And if you look at where NVIDIA is versus the rest of the market, you'll realize very quickly that this big wave up, not saying that it can't go further up, right, is going to dictate a lot of the action. And I was trying to explain it on Friday that NASDAQ is lagging behind the S&P 500 a little bit, right? You can see that NASDAQ is not moved into all-time high or not even close to all-time high, right? Versus the S&P 500, which is just testing all-time highs, right? And this is what we call relative weakness or relative strength, right? And so what were the sectors that actually caused the market to kind of rotate this? And obviously we were talking about sector rotation last week already. So what was the part of the market that actually caused that, right? So you should look at FinViz, you look at the groups section, and you'll be able to tell right away. So look at the 1 week performance. You'll see right after Jackson Hole, obviously real estate is rallying. Why is real estate rallying? Because of the expectation of interest rates coming down, right? That makes housing a bit more affordable, and then that increases returns on real estate investments, right? The second sector that performed best by 1 week was energy, then basic materials, then healthcare, then financials, then consumer cyclicals, industrials, consumer defensive, utilities. Guess where technology is in this mix? It's right on the bottom. In fact, technology was the weakest sector this past week, right? So just to kind of make you understand how things work, right? The sector rotations are not some mumbo jumbo, abracadabra bullshit, right? This is literally money moving through different sectors of the market, and technology is just taking a little bit of a back seat right now. It doesn't mean that technology will be taking a back seat forever. It's just a temporary rotation. And these rotations typically last a couple of weeks, sometimes a couple of, maybe sometimes even a month, right? And if you look at the 1 month performance then, right, you'll see that technology still actually is quite near to the bottom. In fact, the best Performing sectors were communication services and basic materials, which in other words means Meta and what's the other one? Google, right? So those two were the best performing stocks actually. And healthcare has seen a nice rebound after being sold off aggressively, right? It's placed fourth place in the past week and in the past month, right? So if you are confused about market conditions, I hope that this kind of helps you to understand a little bit better. So now that we're talking about, okay, the fact that all this is going to happen, this week's price action is going to be largely dictated by the perception or speculation on NVIDIA earnings. Okay. And whatever happens to NVIDIA after earnings, which could be plus 3%, minus 4%, whatever it is, right? Based on how they perform, which don't even try to guess, don't even try to predict, because as you guys know this, we have mentioned this over and over again, that these earnings are always a 50-50, right? So whether they perform well or not is a different thing altogether. But if you guys remember from almost, I want to say January, we're talking about unusual options activity, betting on 186 strike for December. Well, guess what? Those options hit, right? If you look at it, those options came out somewhere like here, maybe, and they held through this and then held through that, and now they hit their target, right? So probably big money, smart money is out of that trade and looking for somewhere else to go. Okay. I also want to touch on crypto a little bit because this is a good risk barometer. Last week we had Ethereum almost break out into all-time high, got rejected, came back down. Bitcoin attempted to do the same thing. And now it looks like actually Bitcoin's taking a bit of a backseat and Ethereum's the one leading a bit, right? So Bitcoin, not really in a full ascending rally mode, but then remember that it's coming down into this key level where it could turn into support, right? So there's a possibility of a 108,000 bounce, 107,000 bounce, all the way down to like 105, right? And that shouldn't really, mess you up too much in terms of psychology. In terms of global markets, China is also breaking into new highs here. Remember, this is coming out of a multi-year bear market, right? From 2020 all the way to 2025 now is when it broke out of a bear market. So this is one market to watch as well. Okay. So with SPX here, my main focus here will be not to watch primarily whether SPX breaks out, but primarily to watch if NASDAQ can make a higher low bounce. In other words, it follows kind of the structure of this trend line. And even if it kind of does one of these, where it comes down, right, then it bounces higher than prior and then moves further higher, okay? If NASDAQ rejects here, if right, this is not considered rejection yet. If it rejects here and then breaks this level here, and then comes down here to retest this level here, it would need to break this level strongly, which is a big volume node as well, right? To then come down into the previous highs for support, okay? So the bearish trade here would be only on the break of this lows, and that would honestly be like a day trade style. It would not be a swing because this here does not warrant an attractive risk to reward ratio for me to take a swing. Okay, this is all the risk you're taking, and this is all the risk you're taking, and this is the reward you're getting. It's not really, that attractive. Okay. In other news, IWM, which I have been pounding the table on for multiple months and telling you guys, if you didn't buy any here, you should buy some here. You should buy. There were many opportunities to buy this. It looks like it's had a very, very strong inflow. Now, remember, this can reverse very easily, and it has a very strong rejection level here and above it here as well. Okay, this was the previous time that IWM tried to break out. So this will be another attempt at breaking out, third time, right? First, second, and now will be a third. Okay, so keep your eyes on this as well. But remember, don't leave out the question that this could reject here and come back down again for another support here for the further upside. Okay, so always be planning for all the outcomes instead of trying to guess what is the one outcome that's going to work. Now, following Friday, you could see that what we spoke about on previous Sunday webinar, I spoke about how 4.35 would be the key rate at which the 10-year would see some resistance. If not, we would see 4.5, right? That's exactly what we spoke about last Sunday. Well, we did kind of reject, and it looks like this is going to continue downward. And if the 10-year yield breaks below 4.263, which means that TLT, TLH will be breaking out, right? And we spoke about this long-term bond play, which I have given you guys the idea about multiple months before. If you were just patient and you just held your bonds, you would be making coupon payments. In other words, you would get dividends from your bonds. And second of all, in the next 1 year, you would get some capital gains on top of that as well. So with the 10-year yield trying to break this level would be the key in order to alleviate some pressure from the valuations of the S&P 500. And the same thing goes with the dollar index, okay? Though I must say that when the Fed rate cut happens, the dollar is likely to be strengthened, not weakened, okay? Because there will be some pressure for traders to kind of buy more dollars against other basket of currencies to protect against the changing monetary policy tide. Okay. Next thing, the VIX. Now, I mentioned this on Friday as well, right? This is one of the things that you have to keep an eye on. And more importantly, you have two separate kind of, not indicators, but they are kind of guiding pieces of data that can help you to understand where VIX saturation is. And one of them is the VIX anti-VIX indicator, right? And I've explained this to you all many times. When the anti-VIX indicator starts to rise to the red channel, that is a time in which the VIX becomes bid. In other words, equities become more prone to a sell-off. Okay. Sometimes what happens is this is just a slight reset. It's just like a reallocation of resources in the short term. And you can see that majority of the time, it doesn't mean that when it touches this line, it automatically has to go down. Okay. It could hang out here for a little while. Okay. So just take note of that. Okay. So having said that, the VIX being at the top of the range here means that we might see a little bit of a VIX rinse. Okay. What does that mean? That might look like VIX popping on a quick sell-off, maybe to 17 or 18 or whatever, right? Maybe even 15, 16, and then coming back down again. Okay. VIX being at 14, remember, this is like pretty much very low baseline, right? In fact, when we get to 14, this is like the time when the VIX is pretty much, people are not buying protection anymore, right? Even when you get down to $12 or $11 here, is where people have basically, they're not purchasing any protection at all because they're very confident. They're not scared of market conditions anymore, right? They essentially, that's what the VIX is telling you here. So that's where you are in terms of where market positioning is. And if I were to try and predict or guess just for entertainment purpose, right? Not trying to accurately predict where the market's going, I would say that there is a possibility that we make a quick little sideways range this week, okay? And you kind of are in the range already right now, right? If you kind of draw a box here, you will see that this is nothing more than just a range. And there's a high chance that NVIDIA earnings either causes the breakout or the pullback. And that will also lead NASDAQ in whichever direction that kind of it wants to move, basically, right? Okay, now some of the opportunities that I want to discuss. Apple looks amazing here. Great break, pullback, retest. I want to see it reclaim 230 before I actually take a bullish position here. Okay, but I spoke about this setup. It's a great setup. It looks nice from the theoretical standpoint. This is a classic breakout, strong breakout, pullback, retest of the previous breakout area, right? And now it's looking to move further higher into 240s. There was also news that, oh, Apple's going to overhaul the iPhone over the weekend into a 3-year plan, something like that. Okay. Any bullshit news is going to just set this off. Okay. You guys know it really isn't the news that sets this off. It's mostly positioning of market maker, positioning of traders that causes this. I already mentioned multiple times that this huge drop here in Apple and the consolidation here would cause a lot of traders to lose money because they would be betting on a bearish scenario. And when the market reverses, it's going to really, really hurt, right? And so that's kind of what you're seeing here. And as more shorts cover, this will melt further higher. And that will take NASDAQ along with it. It'll take S&P along with it higher. Now, remember that Apple now is not, the leader in market cap, but it is still $3 trillion in market cap. Okay. So there are still a shit ton of people invested in this. Tesla, which is another setup that we have been watching for multiple weeks, has not broken out firmly yet, but this 342 level here is key for us to break, bounce, and then potentially get up into the 360 to 370 range, right? If you're looking for a bearish scenario in Tesla, well, that's going to take a bit of time, right? Because it needs to break all the way down to 15, right? It needs to break this level, come back, retest that level, fail to break out, and then reject, and then you can take the short down into 290 or a potential bounce at 300. And so for that reason, I do not like the bearish setup on Tesla. Okay. Why do I not like the bearish setup on Tesla? Really simple explanation, right? If you take the bearish setup and you entered on this break here, right? Yeah, sure enough, you can take this risk off, whatever you take off, and you could play this all the way down. This is if you don't bounce on this support here. And even so, if you do, and you do take the risk off at 324, your risk to reward ratio is 1.84. That's not great. Now, what happens if you do bounce here? Well, then your risk to reward ratio is even worse, is 1:1, right? So having taken the same risk and adjusting your reward here gives you a shit setup for the downside. However, for the upside, right? If you were to take the breakout play, wrong, right, from here, and you were to risk off somewhere here, which is where you were below you, right? That would be your risk off, because if it broke this, then your trend is going to be pretty much negated, right? Then you still have a 2.34 risk to reward ratio. So in this case point, right, Tesla is a better upside scenario than a downside scenario. And when I talk about loss aversion and the inability to see opportunity cost, this is what I mean. A lot of you do not look at this on the daily. You kind of like eyeball it. You're like, oh, it's going to break out from here. There's this much of distance. And so it's a great trade. That's not how this works. It is down to the actual statistics of it. So you really have to measure and you really have to be objective about how you're going to take the trade. Okay. CRM, nice bounce. See if there's continuation this week. BABA is the other one. We spoke about this for 4 weeks straight. It's been a month since we've been discussing this, right? It's approaching breakout, very likely to get there sometime this or next week. 123, 150 breakout and bounce would be key. I would like to see it get up to 128 first and really, really break that, because this is where you had a previous resistance, which is also trendline resistance. I would like to see this broken first before the upside trade is even talked about. Okay. So more time on BABA, it kind of moves a bit finicky, right? Novo Nordisk, if you took it, it's up how much now? 16% since the entry, right? About 16%. Okay. Webull, if you took it, up 13%. Salesforce, 7.5%. Celsius, 127% since entry. SoFi, 100% since entry. Ethereum, 92% since entry. Coinbase, 76% since entry. Those are just updates on the positions. Okay. Coinbase, nice bounce as well. Not bad. We'll have to still break 349, 350, call it, before it really starts having legs up to all-time high again. We'll not talk about Celsius. This one's kind of melt-up mode. You know, you don't touch anything in melt-up mode, right? It's basic. Yeah, and that's all the setups that I'm looking at for this week. It's mainly Tesla and BABA. CRM if I can, NVDA, I won't be touching that one, right? So just be aware, the market could get into a range if NVIDIA earnings comes out to be less, less than expected. And if NVIDIA blasts earnings, then very good chance that the market will just continue higher, okay? Remember that from a long-term perspective, we are only at the 23.6 extension here on the S&P 500. based on the big wave that we just experienced for Liberation Day, right? 61.8 is still at around 6,900, almost 7,000 on SPX, which, by the way, this is not out of the woods for an end of the year target. Okay, this could be there. Okay. So don't be surprised if by the end of the year you're at 61.8 rejection and then something happens there. Okay. And on NASDAQ, remember that you attempted to break the 23.6 and you got rejected, you came back down, and now you're attempting to break it again. Doesn't mean that it can't go higher. It just means when is it going to go higher. And remember that 61.8 extension on NASDAQ for the same wave is at 25,900. So really, really still a lot of room to the upside before you actually see a cycle rejection based on Fibonacci sequence. Okay. And I think that's it. That's all I have. I don't really need to add anything else. In terms of reports and in terms of stuff that's been on here, there's not much to update you guys there. So I'll hand it over to Andrew and let him do his thing.
All right. Real quick, T, just for the group. With interest rates coming down potentially next year, we know that that'll be bullish for the small caps and the small banks. What will that do for the large banks?
Oh, so they're just like how when interest rates rise, there's almost like a dual effect phenomenon. But usually, what happens is banks get the best end of the stick when that happens. So when interest rates rise, what happens is that their interest income it starts rising as well, because they basically are able to charge higher interest rates to people, right? Because they pass the cost on the consumer, right? When the Fed raises interest rates, they will pass those interest rates down to the consumer. But what happens is in reverse when the Fed cuts rates, then interest rates gets lower. So this is the reason why you would have seen in the past 4 to 5 months, ever since the bond market started predicting that interest rates were going to be cut, you would realize that your high saving accounts, the returns on them would be lower as well. So this is how banks mitigate these things. What they do is before they know interest rates are being cut, they will start cutting the rates that they offer to create a padding so that they can kind of pay people less, they can charge people less, but pay less on the back end. So they kind of create a padding. And so what happens now is interest rate income will start to go down, but then more people will start to borrow. So there's a bit of a delicate seesaw that happens, and it's not like a net effect, but it depends on the bank. Like, Goldman and JP Morgan will continue to kill it. And it's not because of the fact that they're a great bank, it's just because they're a great trading bank, right? They're like the cream of the crop in terms of day traders or whatever, right? But that's what's about to happen. There'll be like a little bit of a seesaw. Oh, by the way, also, I figured that since there are 40 people here, you should probably make the announcement for the webinar. And also, because I realized that we end up doing the announcements at the end. And then by then, we have like 15 people on here and like not everyone's here to listen.
Yeah, you read my
But
mind.
I should probably just give you guys a reminder that next week we are holding the webinar. So this same time slot will be a webinar, okay?
Yes.
And it'll be hopefully 1 hour, but maybe an hour and a half if we have Q&As and everything. So we'll be talking about the mindset. I'll be doing the whole breakdown of bond market, but for this market now. The last time we held the bond market webinar, it was for when we were in a bear market, if you remember that, or approaching a bear market, right? So this will be a different kind of a explanation of bonds. Then we'll talk about money supply because that's tagged to bonds. And then we're going to also talk about advanced option strategies, which is the real cycle strategy, and how these strategies perform in the real world versus social media. So remember, if you haven't signed up for that, I'm dropping the link into the Zoom chat right now so that you can sign up. Okay. And then on top of that, we have 2 courses coming. Okay. So the first one, we already decided on the date, by the way. So essentially 1 week before, it'll be one course, and then the next week will be the next course. So it'll be 2 weeks back to back, Saturday, Sunday, Saturday, Sunday. And we'll be having a rerun of the Becoming a Market Maker course, which is something that we ran. How long ago was that? A couple of months, I would say 5, 6
Yeah,
months.
I don't even know. It was probably
I think it's been
what,
a while.
4 months ago, five
Must have
months
been
ago?
March or April, something like that. So it's been a
Yeah,
while.
somewhere at the beginning of the year.
And
Beginning of the
so we'll be bringing that one back, and then the second one, which is positioning like a market maker, which is where you're going to learn advanced option strategies. This is tailored for people who are trying to go deeper into derivatives. If you really want to understand derivatives and you want to master the sell side and you
year.
want to know how market makers are playing the game, right? Because that's what they are doing. They're being mostly on the sell side, right? You should take that course. Okay. The content is going to be amazing. It's going to be great because we are going to be talking from both our perspectives. And yes, you can buy both of them in a bundle. And they will be 25% off for a stipulated period of time because it's an early bird discount. Okay. So just a heads up, I will be posting the links to those after this webinar is over. So just telling you guys that. Okay.
All right. So we'll see you guys all next week for our free webinar, which will take place of our Sunday session. And then for those that want to go deeper and have a better understanding of the topics that I'm going to talk about and the topics that T talks about, that is the class where you will learn that stuff. That is where we'll spend, countless time answering questions, getting to the nitty gritty for you guys to understand the things that we talk about on a day-to-day basis. For the people that have taken it, we've seen huge growth within them and their portfolios. So let's go ahead and get started on this week's plan, which, as I told you guys at the close of business on Friday, is a really easy week to evaluate. From a price action standpoint, from a news standpoint, you have three events that you need to pay attention to. First one, obviously, NVIDIA earnings. The second one, GDP. And the third one, PCE. Okay. So those will be most likely the news events that move the market. If you guys have been following along with the playbook, then you know that usually the targets are hit due to these news events, even though we know where the key levels are and the actions of the dealers are really what trigger the moves. The news is the catalyst that makes it happen. So, with that being said, let's get into this week's plan. So, I'll read through it and then I'll go ahead and walk you guys through piece by piece and the levels and what we're looking for at those levels. So, on the bullish side, last week we had mentioned that a drawdown into the 638 GP made a lot of sense, if you guys remember, based on what we were seeing from the NAMO being overextended with a possible liquidity sweep into the weekly move. And that's exactly what we got, as the plan is now on a heater with targets getting hit 4 weeks in a row. So remember, we were on kind of a slouch and we weren't hitting our targets. Now the plan is back on track and we've been rolling. That brings us into this week. The key levels to watch are 647, 647, 647. If you guys have followed along, for the last few months, I tend to repeat a level that's pretty important that you should pay attention to. If you figured that out by now, you're probably having some success. If you haven't figured that out by now, you're probably still confused on why I say the same level over and over and over. Because dealers are short 647 this week. That means if price breaks over 647 and goes into price discovery, F your puts is what that stands for. Then we could see dealers have to aggressively start buying shares, which would melt the market further up into the 650 gamma level that we have been watching all year. And as the chart shows, dealers are short 650. So if we break 650, we can very easily push up into 653.63, our bullish weekly target. So these targets are built off the implied volatility of the contracts, which means these targets are not just made up numbers. These numbers are based off of the implied volatility, which means the supply and demand of those contracts, right? So that's why the targets are so accurate. If you guys go to the Fuck Your Furu server, you'll see that we've hit almost every single monthly target for every single ticker that we've done it for. Either a bullish or a bearish, and in some cases, some of them hit both, right? So on the bearish side, if we cannot break over 647 and dealers hold strong that they are going to keep the price down and not buy to hedge, we see some signals on another retrace. The algos are showing a move down into 640, Two, the NAMO is overextended short term. This could lead to price pulling back, and if we break below 643, we could see some selling pressure kick in, driving us into the 640 level. This would trigger dealers to sell shares short as we would move back into negative gamma environment and fear might enter the market again. I would look for a retrace into the 638 GP again with 636.99 or 637, the bearish weekly target most likely getting hit back to back, right? So if you guys remember, last week we hit the bearish target. We did not hit the bullish target, we hit the bearish target. So with that being said, let's take a look at some of this information. So if we take a look here, you can see right here that this is the week 829, and you have buying pressure here at 647, and you have selling pressure here at 643. So that's the 643 that I was talking about, okay? So if we take a look at the chart, we can see right here, 647 is this key level right here. Right, I'm going to move this so you guys can see it better, or so I can see it better, right? And 647 is buying pressure. So what happened here? Dealers decided not to buy shares. Therefore, they did not let the market go higher. Therefore, the market retraced. What is going on over here? That's not me. Is that me? Oh, maybe it is me. I don't even know.
No, it's here. Let me try this.
Somebody's writing on their screen.
Yeah.
So we can see that right here, 647 is the key level. Hence why I repeated it over and over and over. So we can see that if price were to somehow, so where's my mark? There we go. If price were to somehow break over the 647, this would trigger dealers to have to start to buy shares in order to hedge. That would create a squeeze. Okay. So if the market breaks over that 647, then you could see price push up into this 650 gamma. Now, what's interesting about this push here, so if price gets over this, right, and we start to break over here, and this buying pressure kicks in, then that would push price up into the 650. Now, you can see that that is the monthly target for SPY. SPY has not hit its monthly target yet. So that would be the monthly target for the implied volatility of the contracts that we marked at the start of the month. If price breaks over 650, which is a big gamma level, that buying pressure would kick in at 650, melting the market up into the implied move, which would be 653.63. So again, the market could continue to melt higher. Now for the people that want to get bearish. If you wanted to get bearish, this is going to be all messed up now. There we go. If you wanted to get bearish, price would have to stay below 647. Because if it breaks over 647, those dealers are going to have to buy shares to hedge. So if the price stays below 647, and you have this little consolidation here, right? And it breaks down, your first thing you're watching for is a break of that 643, because that is a weekly selling pressure, right? So if that were to break below, you would also break this 4.1 dark pool level, which would drive price down into 640, which is one of your key levels. And if you break 640, there's a very good chance you're coming into this golden pocket, which would be that 638 area, with probably going to come in and hit that 637-ish area, right? So the first thing you're looking for is a close above 647 or a close below 643. Those are going to be the key areas for a shift in direction. Now, for some reason, we break below the golden pocket, we come all the way back down into the lows here, right? Which is what T was talking about, right? And things could get ugly there. Now, I don't know if that's necessarily going to happen. This 635 level held pretty strong, as you can see. We have not broke below this level in quite some time. So this is clearly a support here. And this also tells you, right, because this is selling pressure, that the dealers did not want to sell shares short below this level, right? So the dealers protected their position here, and the dealers have yet to break this. So that we can tell some things from the dealers. The dealers don't want to buy shares to hedge yet, and they don't want to sell shares here to short yet. Other than that, we're just chopping in between these two levels. So those are the key things you need to pay attention to if you're going to day trade this week is does price close above 647 or does price close below 643? Now, for everybody, what time frame are you paying attention to? Go, folks. Go.
1 second.
What time frame are you guys paying attention to? Not 3 minute. Definitely not. The 4 hour. The playbook is designed off the 4 hour time frame. So if you are choosing to watch the 15-minute, that's totally fine. You can watch the 15-minute time frame, but you are not playing the playbook. Okay? So don't message me and say, hey, it closed above 647 on the 15-minute. I can get long now. I'm gonna go, I don't know. You can do whatever the fuck you want. You still got like 2.5 hours until the candle closes. So if it comes back down and you get, you know, crushed because it was a liquidity sweep and you didn't allow the time to play out correctly, that's on you. So what I'm looking for is a 4 hour close above 647 to show that dealers have now taken control of that 647 level to push up into 650. And if price breaks below 643, then I'm looking for it to retrace into that golden pocket. So there we go. That is the plan for this week. It's super simple. Again, over 647, the market can go higher. We go into price discovery. You guys all know the rule when it comes to price discovery. Don't short price discovery. If you want, you can do whatever you guys want with your money. I don't care, but it's not a very smart idea. So with that, I will open it up to you guys and your questions. No, Bougie. You cried and cried and cried at the door. You're out. Go. Go to your mom. Go. You'll be on tick by tick time. Andrew was teasing a year of day trading next year. He's itching. No, I'm not gonna day trade. I was just gonna show people. MDB, I like long. So MDB still hasn't really done anything yet, per se. But it looks like this. Let me get the long-term chart here. So here's MDB. So you have this long-term chart here where it's sitting in this golden pocket down here, and it's finally starting to bounce. You still need to put in a higher low, but it pushed up into this golden pocket. So this would have been your wave right here, your low to your high. And you can see that it closed above that first level, right? You guys always hear me talk about that first level, and it hit the golden pocket, right? So this is where it's tough, right? Because a lot of people want to get into stuff. They're like, oh my gosh, like, it's made its move. If I was looking at this now, the way I would have to look at this would be it'd have to clear this area. You can see for the month it already hit its bearish target. So the question would be, is this going to retrace this move? Right? And so if I look at this, I'm going to get rid of this real quick and get rid of this gamma level real quick. I'll leave the gamma level because we broke on it. But here you can see that if this is your high and this is your low, that you are rejecting that first fib. Right? So for me to get bullish here, I would have to see it get over this level to push back up into the high and into the golden pocket area. And if it stays below this level, I would be looking for it to come down into 177 to 176, right? Because that would be the wave structure, right? So now if you're looking at it on a shorter time frame, you're like, well, Andrew, I really don't care about any of that because I want it short term. Then you'd move into a different time frame, but you'd look at the same thing. So if I'm looking at here and I'm saying this is the high and this is the low, then I don't really care about the main move. I can see that this essentially almost pushed up into the golden pocket, almost got there, rejected a little soon. but came down into the range and then bounced. So where is it currently at? It's inside its monthly range, right? So again, it just depends on what you're looking for. Now, if I go into a smaller time frame, right? This is going to piss me off. There we go. So if I go into a smaller time frame and I say, well, I don't really care about any of that, Andrew. I want even smaller. And I look at this, well, this is a golden pocket bounce, right? So that's the high, that's the low. There's your golden pocket bounce. So again, it just depends on what you're looking for. I don't know when you say, what is my analysis? I don't know what time frame you're looking at, what you're looking for, or if you look at it on the weekly, it looks a little bearish, like it could pull back. If you look at it on the daily, it looks like it already pushed and it didn't really quite go anywhere. And the 4 hour, it could bounce here, but it only bounce up to like 225. And then if it broke 225, maybe it gets back to 230. This is the almost golden pocket rejection that I just showed you guys. Right, so this is the almost golden pocket rejection, or maybe it is on a smaller time frame. Let's see. Yeah, it is a golden pocket rejection. So there's your golden pocket rejection. So again, it just depends on what time frame you're looking at and what you're asking for. Um, but yeah, that's what I have for MDB. You guys have to be more specific in your questions, or else I'm just going to sit here and go through multiple time frames. So I sold puts for income, looking to exit this week. Sold puts, I mean, yeah, I don't think you're wrong. So as long as that golden pocket holds here, it should push higher, right? This would be your, so you'd be looking for it to break and then into this high up here. XOM is an easy one. So XOM, I'm going to go to the weekly. Oh, we'll go to the daily. Nope, you're out. Go. So here's your wave, high of your wave, low of your wave. This is a beautiful 5 wave retrace. You do not get this all the time. Look at this. 1, 2, 3, 4, 5 in the golden pocket. It doesn't get any more prettier than that. Just letting you guys know that. If you guys remember last week, I said this is the only thing I liked. So broke 110. As long as it stays above 110, you're looking for a push up into about 113. That would be about your golden pocket retrace. 115. If it breaks 115, good chance you're going to take the high. If you take the high, good chance you're targeting this 120 level up here, right? So that's where I'm at right now. Would I go buy this right now? Probably not. I would say you're probably late if you're like, well, I'm going to go buy XOM tomorrow. I would say you're late. You're probably going to look at a retrace of some sort. I mean, this is essentially almost at the golden pocket. So not where you'd want to go get long. But for people that listened last week, you should be sitting pretty and be able to scale out of your position and ride your runners for a better trade. Stop, both of you. You're out. You should be able to ride your position to the upside. Now, I just recently posted, well, I didn't post the whole report. I just posted the targets. So if we go into here we go, XOM. I just posted some snippets of it and I posted the target. So they have a target of 130 by Q3 of 2026, which would be next year. So, and then I think I have a gamma target of 120 as the end of the year. I think is what it is. Let's see. Gamma, XOM. Yeah, it's like 120 into the year is the essential target. I don't think we'll get over 120 this year. 120 seems to be the wall. But I wouldn't be surprised if we got back to 120 by the end of the year. So that's kind of where I see things with XOM. But again, I wouldn't go jumping into it this week. I think that was last week is when you should have got into it. If you didn't get into it, then I mean, it is what it is. On to the next one. Pounds are triggering long. Mm, yeah, it bounced in the golden pocket area. I would say back up to 173 to 178 is what I have. So if this is your high here and this is your low, it bounced nicely in that golden pocket, right? So you always got to find your high and your low. So if that's your high and your low, then it bounced nicely in this golden pocket. So a retrace back up into this area would be the target. Pretty sure I'll double check it, but I'm pretty sure that's what I have. Yeah. So I'll be back into that area. And that would just close it inside the monthly range, right? Remember, stocks don't break out of the range. Stocks normally close inside of the range. So why is the range important? Because you need to know what is expected out of the names that you're trading or the names that you're invested in. If you're holding a stock and you're holding it for 4 or 5 years, and in the first week of the month it hits the target, most likely the rest of your month is going to be chop. So, like in Palantir's situation, it went right up into the monthly target and then it rejected. And then it came down, and now it's going to most likely close. Like, let's say it closes in this area, it's going to close in the dead center of the range. And we'll get into this when we do the advanced option strategy. But for you guys, you're going to get a test here, a little snippet. You guys want to wonder where the institutions are selling their contracts? Where do you guys think the institutions, the market makers, are selling all their contracts? They're selling calls up here and they're selling puts down here. So price is going to end up here and they're going to profit all of this and they're going to profit all of this.
I want to say something about PLTR. If any of you are looking to trade or buy any of these shares, I highly recommend you wait until an event like how Apple got hammered, how UNH got hammered, how NVO got hammered.
Yep.
Like, wait for the stock to be completely on the freaking floor, beaten down, like on life support, then buy it. If you're thinking these pullbacks here are enough for you to get in, I have some very bad news for you. This is like the price of the stock is still 4x overvalued from the intrinsic
Oh
value.
yeah. This company's so overvalued. And again, the question you have to ask yourself is, right? Like go back to what we've said since day one, right? When we say you should buy something, it's in fear, right? The company's going under, they can't survive, but the company's still making a ton of money, right? Like the company's quality, but the stock price is telling people that the company's bad. You guys remember when Meta was on the floor and people were like, Meta's going to go out of business. This is the end of Meta. He totally ruined the company. And now it's an $800 stock or 750 or whatever, right? And it was $72 at the time. So and the only thing he did was say, "Oh well, I'm done investing in the metaverse." The stock price just skyrocketed, right? Because he wasn't burning cash anymore. So, if you're looking for an investment, the question you have to ask yourself is if I bought it at 150, would I still be happy if it fell down to 60 bucks? And if the answer is no, then you shouldn't buy it, right? And if the market is still in extreme greed, right? If you go back to where we're at, right? And the market were to pull back, would you feel comfortable holding that company? That's your call. I'm not going to tell you guys what to do, but the market is still in greed. So, no, we are not at a place where I would be going hand over fist buying companies. That's just me personally. But you guys can do whatever you want. I think it could get back to 175, 176. Wouldn't surprise me. Okay. Okay. Palantir, Vive looking to sell puts this week. Vive. That's a no for me.
No, that's a no.
That's a no for me.
You don't sell puts when the stock is trading.
If it breaks over the golden pocket, I'm all for it, but this is a rejection zone.
Yeah. In fact, here's where you should be selling calls, not selling puts.
Yeah, I'd be the opposite. But again, it's your call. If it breaks over the box and breaks over the golden pocket, I like it all the way up to 344. Again, the strategy is very simple, guys. If it I don't go long in the golden pocket. I go long in the golden pocket on the downside. And then I usually don't go short because fuck your puts, right? I don't go short. Um, I just watch things. So unless I'm hedging. But over the golden pocket, I like it all the way up to 344 if there is more strength there. I don't know much about the company, so but that's where I would be at. These damn little dots drive me crazy. Now, if I look at this here, see how where all the price action took place? Inside the golden pocket. I'm willing to bet if I were to draw the volume profile that it's probably, I'll just say here before the breakout. Yeah, it's all right there in the golden pocket. So that would be the area where I would have been selling puts personally. Now, if I take a look here, let's see, we'll just do the start of the breakout to where we're currently at. No, so nothing there. Let's see, we'll go here. Yeah, so see how the volume, so from here, this pump, so there's volume kicking up here. So for me, that'd be a no. Okay. No, still swinging as got the same areas as you. Yep, no problem. I mentioned Lynn a few weeks ago. My price target is 175, maybe by end of year. What do you think? I think it's longer than end of year. We've looked at Lynn a few times. I think Dylan has brought this one up quite a bit. And end of year, maybe. It was a great buy out of the golden pocket. 160, 168, maybe. So the question is it going to just keep going straight up or is it going to pull back? Right? Is it going to do this and then this? These are weekly candles, so it just depends. I don't like to try to time things when it comes to the golden pocket. I just play the levels. So it was a great buy out of this area. But end of year, if it pulls back on you, probably not, right? Like if it were to retrace and then complete its move, you might look at longer than that. I think you're asking for a time frame because you want to buy options. So I think it just depends. But target's 160 to 168. If it's equity, then I wouldn't worry about the time frame. If it's equity, it's really simple. Like if you're doing the golden pocket strategy and your equity, it's really easy. As long as the golden pocket holds here, this is the target. That's it. If you want to trade options, I understand there's a time situation there, right? Because you're not an investor, you're a trader of time, right? So, but if you're buying equity, then the strategy is very simple. As long as the golden pocket holds, and here's why the golden pocket is so important for people that are trading equity over options. So let's say this is the plan, right? So it bounced in the golden pocket. Now, where people get messed up is if you are buying this for the wave structure, the first move is to the golden pocket. Then it either consolidates or it retraces. If it retraces and bounces, you now put in a higher low, right? The second wave is going to push you through the golden pocket. Once you break the golden pocket, you go into the high. Once you break the high, usually if you're quality companies, you go into price discovery. When you go into price discovery, your first target is the extension. Then your second target is the second extension. That is your wave structure. So if you bought down here you don't have to worry about like time. I think it's going to hit here by the end of the year. You're worried about the wave structure. Is the wave structure still intact? And if the wave structure is still intact, then you don't have to worry about the time. The only time you have to play time into it is if you're playing options. And if you're playing options, then yes, you have to be dictated, concerned about the time. But if you're investing in the company because you think it's an undervalued company, you think it's a good trade, you want to build a position in it, don't get stuck up on the time because then you'll start to convince yourself that you're wrong because it didn't happen within your time frame. And the wave structure itself it doesn't play into time, right? So like for Vive, for example, right? So like let's use Vive as an example because that one had a strong consolidation in the golden pocket, right? If you look at this, if you were trading options, you absolutely got murdered because it consolidated in this area for a long time, right? From basically 2022 to 2020, end of 2024. So for like 2 years. But if you invested in it and you believed in the company, now you're reaping the benefits. And if it breaks here, then it goes here. And if it breaks here, then it goes higher and into price discovery and so on and so forth. But time doesn't matter. So if you're buying equity and you believe in the company, don't worry about the time. If you're buying options, therefore you have to think about the time, the wave structure can become your enemy. So just keep that in mind. I was wondering, can Microsoft come down? Come down? Microsoft come down. I mean, it can come down a lot. Just depends on what the market does. I mean, realistically, you would come down to back test your breakout, right? Be like in that area. Um, just depends what the market does. Looks ugly, I'll tell you that much. I mean, 481 is the end of your month target still. So maybe 481. If the market's bearish, could be Microsoft that leads it. Looks like it has an order block down here that it's bouncing in. Could play as support. Let's see. Oh, maybe there's not. I don't know what time frame that was. I don't know. Daily maybe? The daily time. Oh yeah, daily order block here. So could bounce here. If it breaks below that, I would expect 481. That's the end of the month target. So it already hit the bullish target. So very quickly, right off of earnings, hit the bullish target, rejected, back inside the zone. So maybe if it breaks here, it comes down into this. If the market's bullish, I expect it to come back up to like 520 baseline. So just depends on what the overall market does, most likely. As far as like ugly, ugly situation, like this is your like your wave. I mean, it's pretty ugly. So under 520, it doesn't look good. Needs to get back over 520 for sure. That's kind of where Microsoft's at. I noticed Apple didn't break any resistance after J-hole. Like it's stuck in the golden pocket. I wouldn't touch Apple personally. Again, I just stick to my strategy. You guys can do whatever you want, but I wouldn't touch it. Simple. I mean, you can like it all you want. It's got to break through the golden pocket. So it's got to get over 238, over 238 into 250, over 250 to 260. Really easy. If it rejects here, it probably pulls back. But again, not where I would touch it. Crowd has earnings, so that's 50-50. I did see some 500 flow, but crowd has earnings on what, Wednesday? Tuesday. Crowd has earnings on Tuesday, Wednesday. This looks like it wants to come down to the golden pocket, but earnings are 50-50, so you're gonna live and die by the earnings call. To me, it looks like it wants to come down to here. This would be a great buy. If earnings falls to like 370, 350-ish, I would look to buy this. But where it's a no-go for me.
Yeah, cybersecurity has been lagging a bit.
Where'd all my questions go? Oh, they're there. Dell. Uh, Almost pushed up into the high. I'm not a fan of this one. It doesn't check any boxes for me. This looks like a golden pocket rejection on this overall wave here. Oops, flipped it. Yeah, that doesn't check any boxes for me. So I would say this looks like a pullback. I personally think what was driving Dell? Their NVDA collaboration or whatever. I think Dell's a dying company, personally. That's just me.
I haven't looked at their financials in like 20 years, I think.
Yeah, I just this pump wasn't this like NVIDIA,
Yeah, that was
like
AI, I
collaboration with
think.
NVIDIA or something?
It was the AI boom.
Yeah, it was like something they were doing something with NVIDIA, I want to say. It's just looks, I don't know. I'd pass on it. Add desk. Add desk. Mm, looks like it wants to come down. See. You got lower highs. This looks like it wants to come down as well. Short term, you could get a bounce here, back up to golden pocket, should be like 300, 303, and then I'd expect it to push down further. So you're even starting to look at like wave structure here. 1, 2, 3. Here would be 4, and then you'd extend down. Would be like 5, something like that. Also earnings, so 50-50. Maybe if it comes down here. Alta, retail's been getting hammered. Also earnings. So looks like again, it did exactly what we said. I don't know if you guys remember this one. Um, Over the golden pocket, so I could see maybe 563, but earnings 50-50, so doesn't really matter what I think. But overextended, so maybe it pulls back. I can't imagine retail's having a great earnings season. Um, but we'll see what they've got in store. So again, earnings is always going to be 50-50 with me. So um, usually aren't going to get much unless it's sitting in like a really nice spot. But this is pretty overextended. I wouldn't buy this personally.
I'm gonna go ahead and end the recording here.
Yeah, you're good.